Ira Epstein with your metals market update, and this is for Tuesday, the 20th of August, 2019. You know, crazy thing, this morning the market was up nicely. We're approaching the highs of the day, and it slipped away. In my morning subscriber video, I was talking gold and possibility that you have to watch out here. Late in the day, you don't. There's a difference in early in the morning, late in the day. This is a market that got down to 1503. It has bounced $15 now off the low, and the silver is keeping pace with the gold. Silver in dollar terms is up $1,000 almost a contract. This is 630. So silver's gaining a little bit. The copper market looks absolutely terrible. The chart action, again, in my opinion, flipped back to the bear side. Platinum's got problems, and you're getting spreads going palladium versus platinum is what I'm seeing. The president spoke 20 minutes ago as he's got the head of Romania in the Oval Office, and he did one of his news impromptu conferences. Notice there's no more news secretary. When's the last time you saw him hold one of those, the daily briefings? The president does them now. And as you can see, the stock market's weighing down on whatever he said, and I did listen to it. He is talking about possibilities of employment tax cuts, things of that nature, but he's not ready to do it. Well, market, obviously in the metals, it's up on that news. So whether you like it or not, those are the things going on. Now, we're still down on a weekly chart of closes, about $6.50 for the week. That's not bad, given you were just at your all-time, and I use that word again, your most recent high close of $15,1250. I'm just not used to prices over $1,500, and you can see very much why. When we take a look at the action here, this is still distribution. That's the problem. You haven't walked away from all this. You still have a pattern of lower highs, and now 1504.50 was the last low. You cleared that yesterday, and you put an emphasis number by getting the 1503 today. So on this rally, I'm still looking for resistance unless the market develops another pattern in it. It has not been strong enough to get down to the 18-day average, which keeps the bulls biased to the upside. I admit the market weakened on this chart pattern, and as you can see, the Bollinger Band is pretty far away at 1561.40. So where's the momentum? Well, the momentum of the market, unfortunately, lost its embedded reading. When you lose an embedded reading, the only time you can get it back is the next day. Now, I'm going to go to yesterday's action. Your reading here on Monday was one number under 80. The days before, both numbers were over 80 at least 3 days in a row. That's what embedded is. It's locked in. When you lose it, often, the word is not always, often is the word, the market will try to get price in the closest of a moving average together again. You lost it there. You tried today. You failed. One day doesn't prove that it's going to stay failed, but that's exactly where you're at this point in time. Now, the settlement price tonight is going to be lower than this. It's going to be around 1570. Remember, the settlement's determined at 12:30 Central Time. So no matter how you rally, even if you were to get from here a $10 rally, the slow stochastic is not going to re-embed. What I've been watching to get a better idea, and you couldn't do it when I put out my morning update for my subscribers, was seeing what this market's doing. And GLD is acting a lot better and more bullish than the futures. First thing, you have not lost the embedded reading. That's strong. Second, you took out yesterday's high. That creates the pattern of higher lows. You've already had the higher highs. If I take this off the chart, you had a higher high and a lower low pattern. It today turned itself bullish. So until this number, 140.85, is taken out, about $1.40 from where you're at, the market still looks in good shape. I'm guessing this is leading the futures market. GDX is fighting a battle right now at the 18-day average of closes. It had hit its upper Bollinger Band, had fallen back with a pattern of lower highs, lower lows into what I term the line in the sand. And it's from here markets try to decide what to do. The market's high today is 28.97. The previous high was 29.09, and there's still time to go here. You haven't finished the day out. That'll finish at 3 p.m., and the last time on this chart is not there. You're at, let's see, what time is it? I'm looking here. About 2:40 p.m., 2:45. So there's a little bit of time to go there. Gold-silver ratio. I want to see this line if you want to see a bullish market in gold, defined as what typically happens. You get silver going with gold, slipping back under that 18-day moving average. It's trading at 87.91 right now, which is under 87.98, but it didn't take out this previous low, and that was right here on a closing basis of 87.69. That's really the number on a settlement I needed to get under. Then I can say you've had your bit of a correction, and now it looks like silver from this ratio wants to be stronger. In terms of silver itself, no, you don't see that on the chart action. First, you're overbought. Second, lower highs, lower lows. That's negated because the bias is up as you're over the 18-day average, but there's nothing here that is saying it's trending to the upside. The copper action today was quite bearish. You took out this 258.30. So that reinstated the pattern of lower highs with lower lows. Momentum stopped arcing to the upside. It looks like it has to decide now, is it ready to go back to the downside? And if it does, the potential is there for the 250, 253 area, the lower Bollinger Band. Resistance remains 262.10. Take out yesterday's high of 263.20, and I think you got to go back to the shop and see what's going to happen, because you'd end up with a lower low and a higher high. That would not be a trend. In the platinum market, you're fighting at the 100-day average. So what we originally did is we had a market that started rolling over, had the outside day down, got to the lower Bollinger Band all in one day. It also confirmed a downtrend. The market retested itself, started coming up and using the 100-day average as resistance, made a run for the 18-day average, pulling back right here to the 100. Certainly still lower highs, lower lows. You could get a surprise to the upside if you don't take out this low and you do take out 860.90. Why? Because then you'll argue, at least I'll argue, that the 100-day average is offering an idea of a springboard. Get over that, you'll have higher lows, higher highs potentially, putting back into play higher numbers. So that's what I'm looking at. That's the what if. And I think if you're bearish, you have to have a game plan. What if something happens? The palladium's taken over the leadership in the metal markets temporarily. It held that 100-day average, and it's accelerating to the upside. It's not overbought. It is not in an uptrend on the swing line. It's visually in an uptrend, but lower low, higher high, pullbacks. I would look for support in between the 18-day average at first. It could reach for the 100, but I think the 18 is probably the better play that the market will look at. And watch out in the dollar index. It failed to get up to the upper Bollinger Band, and you're having an outside day down. One day does not make a trend, but the market hasn't been trending on the swing line. It's had a lower low, higher high. The currencies are difficult in latter August. You should ask me, Ira, why is that? Your European A-League traders are on vacation. America people are finishing up their vacations. So you don't get that type of real pizzazz, as I want to call it, back and forth. Just something that I want you to consider as you trade currencies. Come September, the game starts changing very quickly. I call it the A-League is back in time. All right. One of the things that I'd like to talk to you about is an indicator called an Arun indicator that is popular because what it helps you do is see right from the indicator, is the market trending and getting stronger within that trend, or weakening or about to change the trend. It does all three. So I created a series of videos that, number one, explains the workings of it. Number two, how to plot it on your chart so you can work it with your own indicators. Most people will have this indicator if they've got one of the more sophisticated chart services. If you have one of those that only has 5 or 8 studies, probably you don't have it. But if you have one of those, I explain what it does, how it works, what these lines mean, and what they tell you as you put this on the chart. I don't keep it on my chart. I put it up on the chart when I want to say, is this thing doing what I think it's doing? And it starts telling me. So how do you use it? Well, it's simple. As I said, we have a free video series. Go to our website. when you see our new look of our website, it's very simple, and that was the design of it. If you want free offers, click it. You'll see the different offerings we have. Check them off one by one, and they'll be sent to you by email. If you need other help, just give us a call. We're there to help you with this number, 866-973-2077. And remember, if you're watching me on YouTube, you can click on what we call this card symbol. It'll take you right to where you need on that page. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.